Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we're looking for a wave 1, 2 that are already finished and now working on a wave 3 to the upside. A wave 3 most commonly is the strongest, most impulsive wave to the upside, where you want to see volume moving to the upside as well, and you don't want to see too many of these sideways ranges, as you want to see strong continuation and eventually get a bigger range in a wave 4. Now what we're looking for an impulse is at least another high on the chart and then a 1, 2, 3, 4 and then a wave 5, where this wave 5 is then going to be made on lower volume. If price moves to the upside and increases in volume, then we're simply going to extend this wave 3 to higher prices to come. But we do have important resistance above price, which is the golden box here between 38.5 and 39k, specifically two levels in this golden target box that are very, very important. First of all, the point of control of 2021, 38.7k, the very high time frame weekly range, incredibly important level. And secondly, at 39k, we have a weekly naked point of control over here, which also is very important resistance inside that golden target box. Alternatively, we are working on a wave 1 and we're still waiting for a wave 2, where this low over here is the low of your range and then a complex structure WXY. This is going to be a 1, 2, 3, 4 wave 5 to the upside, finishing 1, rejecting at the golden target box, moving to the downside in a wave 2, and then you're going to be looking for a move to the upside in a bigger wave 3 in the bullish scenario. But by all means, you want to see another high made before hitting invalidations of a wave 4. And that is what I'm going to be showing you over here. Because if price moves to the downside and hits this 0.618, a wave 4 is invalidated and the probabilities to continue to the downside will increase. So what we're looking for here is then 1, 2, 3, 4, 5. And this wave 3, yes, it carries the most amount of volume, but that's why we want to see a 4 and a 5. Has to be said that the sub-degree count of this wave 3 over here is a bit messy. It's not a clean wave 3 to the upside. And also something that I at least want to say is that, as you can see, the highest amount of volume is in this last push to the upside. And what I usually do then is pull fibs from the most recent range to the high that we made, right? The high of this volume push to the upside, which is this one over here. Toggle on the wave 4 Fibonacci targets. And you can see a bounce on the 382, which is nice, right? That's what we like to see for a wave 4 and then a wave 5. But on the lower time frames, this move to the upside here looks very 3-wavy. Have a look on the 3 minute. If this is your wave 4 and this is your wave 5, then it looks very 3-wavy. 1, 2, and then what? 3 or 1, 2, 3, 4, 5. But then your wave 3 is shorter than your 5. And your wave 3 is also shorter than your 1, which is not allowed. So that doesn't look too great on the lower time frames as a wave 5 to the upside, which means that if I pull a fib from the low to this high over here and then look at this as a potential wave 4 move to the downside, then price has hit the local 0.618 over here. And the reason this is important is because if this is your highest volume move in a wave 3, then usually the ranges that you get before are either a buildup of some wave 2s or this is an extended wave 5. But of course, most commonly it's a wave 3. And therefore, if this is your latest wave 2 and you're looking for a, well, first wave 4, it's very, very deep, hit the 0.618, which would invalidate a wave 4. So that is not ideal. But just to keep things safe and a little bit easier, take a fib from the low to the high, and if the 0.618 is hit, that is when probabilities really change. But this is not ideal, what I just explained for the bullish scenario. It does lower the probabilities for that particular scenario. In the bearish scenario, we are looking for another move to the downside before then continuation to the upside. So we're still looking on a wave 4 to finish of a higher degree before then going up for a wave 5 in a complex sideways structure WXY, where in this wave Y, we are then looking for a flat scenario with a wave A, double zigzag over here in a WXY. Then we have a wave B to the upside, which has to be a 3-wave structure, preferably then wave B is already in, because we're looking for a 3-waver, of course. As mentioned, this could be a 3-wave move as long as we don't take the high, and if price moves down, takes these lows, probabilities increase to continue to the downside as well. For a regular flat, your most common target is the 0.9 to the 0.5 Fibonacci taken from the high to the low. And for an expanding flat, this is your most common target area over here between 38.8 and 39.1k. The max target here, the 105 by the way, sitting at 38.5k. But of course, we want to see three-wave structures. If price moves to the upside right now, it starts to become a five-wave structure. And that is of course not what we like to see in a wave B. So preferably at the moment, this would be your high, and you're going to be looking for a move to the downside in a wave C, which then is an impulsive structure to the downside, 1, 2, 3, 4, eventually a wave 5, where the most common target area for wave C is taken from the high to the low of A to the high we have over here, which is sitting on top of the blue box over here. And that box is sitting between 36.3k and 36.5k. So that is some nice confluence, but a wave C can be quite extended, and we do have over here a double top at 35.5, or double bottom, sorry, at 35.5k, which is interesting as well for maybe a bit of a liquidity grab. So if price moves to the downside, then those are the levels that I am gonna keep my eye on. Now this is then of course what you're looking for: wave A, wave B, wave C. Already mentioned that for a wave 3, this is not the cleanest structure over here. A lot of overlap, a lot of messy price action at the beginning. But to keep things simple, take the low and the probabilities increase. Take the high and the probabilities increase. We're going to move to the upside in a more impulsive structure, but we do have very big resistance, right? We're ranging below resistance basically. Now then we have my stuff folder. We currently have a double top over here. So that increases probabilities that at a certain moment in time, we are going to take the high. We also hit the 886 numerous times over here with 1 hour candles. So if price moves to the downside, the probabilities are higher. It's a wave C or a wave Y, because the 886 is a common target for a wave B and a wave X, and it is a rare target for a wave 2. So therefore, any move you get to the downside, higher probability C or Y, which means probabilities will be higher to then return to the upside and take the double top that we have over here. As mentioned last night in the last video that I made, after the 886 is hit, it is very common for price to move to the golden pocket and look for potential support or resistance. Now price moved to the downside over here to the golden pocket, back to the 886 as you can see, and we have to continue to observe local price action to get the probabilities of what is happening. The second time hitting the 886 does increase probabilities for continuation, but it really depends what we see here, because this can still be a 1, 2, 3 in the bearish scenario. If we look at the if we look at the CVD divergences, we did have bearish CVD divergences, but as you can see, these have been invalidated as price moved to the upside. We also have over here the bullish CVD divergences as price was ranging on top of the golden pocket over here. We got these bullish CVD divergences. It is important, however, that the CVD divergences that price is creating on the right side of the recent high have priority. Those are really the ones that we want to keep an eye on. So let's have a look at what is happening locally. And we don't have, let's see over here, bearish CVD divergences on yellow, but we do have bearish CVD divergences on blue at the moment. Lower high on price, but look at the blue little top over here. Let me actually remove the yellow line just to clear that up. So you can see we have over here a lower high on price. But if you look at my horizontal cursor line, which is on the high, the CVD high of the blue line, and look to the right, then you can see we do have a higher high here. So lower high on price, higher high on the blue CVD. That's a bearish CVD divergence. That's of course not something that we really like to see. And also on yellow, we have a red candle with CVD moving to the upside. That's a bearish in candle divergence. So that is of course not ideal for the bullish scenario, where the bullish CVD, just to show over here, higher low in price, lower low on yellow, but most important are the ones on the right side of the recent high. So currently we have a bearish CVD between this high and the lower high that we have over there. If we then finally look at the probabilities of the different scenarios, it's a little bit of text, but currently over here on the medium time frame, right, if we zoom out, the probabilities remain higher to still look for higher prices to come. either directly or a move to the downside, right? And the move to the downside, well, we do have some bearish CVD divergences, which at the beginning of recording were not yet there, funny enough, or didn't look at over here. So that is interesting for the more bearish scenario. So maybe first go down and then have a move to the upside. But in general, we're still looking for a wave 5 to the upside. On the low time frame, neutral slash slightly bearish, I should say. We don't really have a nice wave 3 to the upside as we would like to see over here structure wise. If price makes a new low over here, then the probabilities will surely increase for a move down. The fact that we already just now spotted the bearish CVD divergences here also increases probabilities to move to the downside. So that is why neutral, yeah, but slightly bearish, right? Probabilities increasing for the bearish side. We do have over here support on the golden pocket. 886 has been touched multiple times now, and we do have some bullish CVD, but that is one pivot on the left and one pivot on the right of the recent high. And just mentioned, CVDs on the right side are most important. So if price can continue to invalidate the bearish CVD divergences, well, simply look for the upside. So over here I said, hey, as long as the low holds, we can look for upside, but you know, we do have bearish CVD divergences here, and probabilities are ever changing, where yes, as long as this low holds, there is the higher probability, or the probabilities, not higher at the moment, probabilities to move to the upside, but it's neutral slash slightly bearish at the moment. So yeah, simply said, take the low. We're going to be looking for lower prices, stay above the low. There is still the potential to move up, but we got those bearish CVD divergences, not ideal, and the probabilities for the bearish scenarios are increasing with these bearish CVD divergences over here. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.